Hello, everyone, and welcome back to Digital Decode. I'm Alex, and with me, as always, is the brilliant Jamie.
Hi, everyone. Great to be here, Alex. Today, we're diving into some big news from Europe that could change how businesses use digital technology.
Exactly. Sometimes the rules for things like privacy, cybersecurity, and AI can feel really complicated. Well, Europe is trying to make things much simpler.
Right. On November 19th, 2025, the European Commission announced something called the Digital Omnibus Package. Think of omnibus like a big bus carrying many different things. In this case, a lot of digital rules.
That's a great way to put it, Jamie. This isn't just a small change. It's a huge plan to make the EU's digital laws easier to understand and follow. The main goal? To reduce the paperwork and rules businesses have to deal with and to help new digital ideas grow.
And that means saving money, right? The Commission thinks these changes could save businesses around 5 billion euros and public authorities another 1 billion euros by 2029. Wow, that's a lot of savings.
It really is. So, what are some of these key changes? First, they're bringing together different data rules under one big framework called the Data Act. This should make it clearer for companies how to handle data.
Plus, they want to help European AI companies. They're making it easier for them to get access to good, new data. You know, AI systems need a lot of data to learn and become smart. This new plan wants to give them better access.
Exactly. And speaking of AI, they're also changing parts of the EU's AI Act. For example, they're making things a bit easier for small and medium-sized businesses. We often call them SMEs, and even smaller ones. This helps the smaller companies that might struggle with very strict rules.
That's smart. It means smaller companies can also innovate without facing too many difficult rules. They're also adjusting rules for what they call high-risk AI systems.
Right. High-risk AI means systems that could have serious consequences if they go wrong, like AI used in medical devices or for safety. The new plan makes it clearer when these specific rules will start, generally by December 2027 or August 2028, depending on the system.
And here's another important point, Alex. The new rules allow companies to use personal data, like names or health information, for developing AI systems. This is allowed if they have a legitimate interest, so a good, fair reason, and if they put in place strong protections to keep that data safe.
That's a crucial balance, isn't it? Innovation needs data, but privacy is also super important. Now, these changes aren't just for countries within the EU. They'll also have a big impact outside, especially for the United Kingdom.
Yes, because the UK still uses its own version of the EU's old data privacy law, GDPR. So any big changes from the EU will definitely be watched closely by the UK.
Absolutely. Now, it's important to remember that this digital omnibus isn't law yet. It needs to be discussed and agreed upon by other parts of the EU government, like the European Parliament.
But it shows a very clear direction, doesn't it? The EU wants to create a digital environment that's clear, easy to navigate, and really helps new technologies grow.
A cleaner, clearer digital highway. Thanks for breaking that down with me, Alex.
My pleasure, Alex. And thank you all for listening to Digital Decode. We'll see you next time.
Hey, Jamie, have you ever thought about applying for a job and maybe a computer program and AI reads your resume first?
Oh, absolutely, Alex. It's already happening in many places, right? AI is becoming a huge part of our lives, even when we're looking for work.
Exactly. And that's our big topic today. We're talking about how U.S. states are starting to make new laws about how companies can use artificial intelligence, that's AI, in the workplace.
Wow, new laws. That sounds like a pretty significant development. Tell me more about which states are doing this and when these changes start.
Well, we're looking at January 1st, 2026, so not too far away. 2 states, Illinois and Texas, are leading the way. Illinois will have a specific law for AI in hiring, and Texas has what they call a Responsible Artificial Intelligence Governance Act.
Interesting. So Illinois is focusing on hiring specifically. What about Texas? What does responsible AI governance mean in this context?
Good question. Both of these state laws are trying to address concerns about AI in important human resources areas. Things like recruiting new people, deciding how much to pay employees, and even managing how people perform at their jobs. They want to make sure AI is used fairly and ethically.
Right, because we've heard stories. Sometimes AI can have biases or make mistakes. So these laws are trying to create some rules for how companies use these powerful tools.
Precisely. It's all about finding that balance. And what's really interesting is that these state-level efforts are happening at the same time as bigger national efforts.
You mean the federal government, the White House?
Yes, exactly. The White House under President Trump has been working hard to make the U.S. a global leader in AI innovation. President Trump signed executive orders in July, and there was also a comprehensive AI action plan issued over the summer.
So President Trump is pushing for new AI technology, but also wants to make sure it's developed and used safely and ethically. Is that the idea?
That's it. He wants to foster progress but also manage potential risks. However, Jamie, here's where it gets a little tricky for businesses.
Oh, what's the challenge?
Because these are state laws and they can be different from each other. So imagine a company that operates in Illinois and Texas, or even more states. They might have to follow a whole patchwork of different rules.
Oh, I see. So it's not one big national rule, but many smaller, different rules depending on where the company is. That sounds like a lot for businesses to keep track of.
It really is. Companies that work across state lines will need to be super careful. They'll have to monitor these new laws and change their AI strategies to make sure they are following all the rules.
So the big takeaway is that AI is changing the workplace fast, and governments, both state and federal, are trying to keep up with laws. And businesses really need to be responsible with how they use AI, especially when it affects people's jobs.
You've got it perfectly, Jamie. It's an exciting time with AI, but also one that needs careful management and clear rules to protect everyone.
Thanks, Alex. That was a really clear breakdown of some complex but super important news.
Welcome back, everyone, to the Market Buzz. I'm Alex.
And I'm Jamie. We're here to break down the big financial news in a simple way for you. Alex, what's got everyone talking in the money world this week?
Well, Jamie, it's been a pretty interesting end to the week. On Friday, December 5th, 2025, global stock markets, which are basically places where companies' shares are bought and sold, showed a generally positive trend. People were feeling good.
Right. So what does positive trend mean exactly?
It means that the value of many companies went up. In the U.S., for example, the S&P 500, that's a big group of 500 large U.S. companies, went up a little, 0.1%. And the NASDAQ composite, which has a lot of technology companies, gained 0.2%.
Oh, wow. So tech companies did well. But I saw something about the Dow Jones.
Good catch. The Dow Jones Industrial Average, another famous group of 30 big U.S. companies, actually went down just a tiny bit, 0.1%. So it was a mixed picture on Wall Street, which is where the U.S. stock market is, but mostly positive.
And it wasn't just the U.S., was it?
Exactly. Over in Europe, major markets also saw gains. Germany's DAX, their main stock index, went up 0.5%, and Paris's CAC 40 rose 0.2%. So good news all around the world.
That's great. But why? Why were people feeling so optimistic about the markets? What was the big reason?
The main reason, Jamie, is the growing belief that the Federal Reserve, which is like the central bank of the U.S., will cut interest rates very soon.
Ah, the Fed. So for our listeners, what does an interest rate cut mean?
Good question. Think of it like this. An interest rate is the cost of borrowing money. If the Fed cuts interest rates, it means it becomes cheaper for banks and then for people and businesses to borrow money. This usually encourages people to spend and invest more, which is good for the economy and often for stock prices.
That makes sense. And traders, people who buy and sell shares, are really expecting this, right?
Absolutely. They're actually pricing in a 90% chance that the Fed will cut rates by 0.25 percentage points next week. That's a very high chance, and it's making investors quite optimistic.
Wow, 90%. That's almost a sure thing. And how has this expectation affected other parts of the market? Like, what about the US dollar?
You know, it's had some broader effects. The US dollar has become a bit softer, meaning it's not as strong compared to other currencies, and this optimism has also pushed up prices for commodities.
Commodities? What are those?
Commodities are basic goods like gold, oil, or copper. And guess what? Gold reached a record high of $4,221 per ounce. And copper, another important metal, climbed to an unprecedented $11,705 per ton. So prices for these raw materials went way up.
That's incredible. Record highs for gold and copper? So everything sounds super positive. Is there any catch? Any reason for investors to be careful?
You're right to ask, Jamie. There's always a but in the financial world. While a rate cut usually helps investments, there's some recent economic data that could make the Federal Reserve think twice.
Oh, what kind of data?
Well, U.S. weekly unemployment benefit claims recently fell to a 3-year low.
Unemployment claims? So that means fewer people are asking for money because they don't have a job, right? That sounds like good news.
It is good news for the job market, exactly. It shows that the job market is strong and healthy. But a very strong job market might make the Federal Reserve less likely to cut rates aggressively. If the economy is already doing well, they might not feel the need to make borrowing money even cheaper.
Ah, I see. So a strong job market could potentially slow down the rate cuts, which introduces a bit of uncertainty.
Precisely. It's a bit of a balancing act for the Fed. But even with that small bit of caution, the overall feeling on Friday was still very positive, with markets expecting those gains to continue because of the likely supportive policy from the Fed.
So to sum it up, generally good vibes in the stock market, driven by strong expectations for a Federal Reserve rate cut next week, which also pushed up gold and copper prices. But a super strong job market might make the Fed a little less eager to cut rates.
You got it, Jamie. A great summary for our listeners. It's always a complex dance in the world of finance.
Absolutely. And that's all the buzz for this week on The Market Buzz.
Thanks for joining us.
See you next time.
Hey, everyone, and welcome back to Tech Talk Today. I'm Alex.
And I'm Jamie. And do we have some exciting news from the tech world for you today, Alex?
Oh, we certainly do, Jamie. We're diving into the impressive numbers from Hewlett-Packard Enterprise, or HPE for short. You know, the big tech company.
Right, HPE. So what's got everyone talking? Did they have a good quarter?
A good quarter, Jamie. They had a record-breaking quarter. For the end of last year, October 2025, HPE announced their highest ever quarterly money earned and profit.
Wow, record numbers. That's really something. How much money did they actually bring in?
Get this, their total money earned, what we call revenue, went up a huge 17% compared to the same time last year. They brought in an amazing $77.7 billion.
$77.7 billion? That's an incredible amount of money, Alex. And they grew by 17%? That's a lot.
Exactly. And not only that, but they actually did even better than they expected, which is always a great sign for a company.
Oh, for sure. So what's their secret? How did they manage such strong results?
Well, their CEO, Antonio Neri, said it was all about working very hard and making smart choices. He called it a transformative year for the company.
Transformative. So big changes that help them grow a lot.
Yes, exactly. Two main things really made a difference. First, they bought another big company called Juniper Networks. That made their networking business much bigger.
Ah, expanding their business by buying another one. Smart move to get stronger in the market.
And second, their business is focused on AI, that's artificial intelligence, and cloud technology really grew a lot. You know, AI is a huge topic right now.
Absolutely. AI is everywhere, so they're definitely in the right place with those popular technologies.
That's right. And because of all this success and growth, they're feeling super confident about the future.
Oh, are they predicting even more good news for themselves?
They are. They've actually raised their predictions for next year, for 2026. They now expect to earn between $9 billion and $9.4 billion in revenue.
Wow, so they're expecting even more growth and money next year? That sounds like a very positive outlook for HPE.
It really does. They also expect to have more cash ready to use, predicting between $1.7 billion and $2 billion. It shows they're strong and ready to invest more.
That's fantastic. Strong growth, smart business moves, and big plans for the future. HPE seems to be on a roll.
Absolutely, Jamie. It just goes to show that in the fast-moving tech world, if you keep innovating and make smart decisions, you can really achieve great things.
Well said, Alex. A truly inspiring story from the tech giant.
Indeed. And that's all for this tech update on HPE. Join us next time on Tech Talk Today.
Bye for now.
Hey everyone, and welcome back to Tech Talk. I'm Alex.
And I'm Jamie. We're here to break down the latest in the tech world for you, keeping it simple and fun.
Exactly. And today, Jamie, we've got some big news for anyone who uses WhatsApp. That's pretty much everyone, right?
So true. Almost everyone I know uses WhatsApp. So, what's happening, Alex?
Well, the European Union, which is a group of countries in Europe, has started a formal investigation into Meta.
Oh, Meta. That's the big company that owns Facebook, Instagram, and of course, WhatsApp, right?
You got it. They're looking into some new rules Meta is making for artificial intelligence, or AI, on WhatsApp.
AI on WhatsApp? What kind of AI? Like smart chat functions or something?
Exactly. Meta has its own AI assistant called Meta AI, and the European authorities are worried that Meta's new rules, which will start fully in January 2026, might give Meta AI an unfair advantage.
Unfair advantage. So it might make it harder for other AI assistants or AI programs to work well on WhatsApp?
That's the concern, Jamie. They're basically asking, is Meta using its power, because so many people use WhatsApp, to make its own AI better than others on its platform?
Wow, that sounds serious. So this investigation, what's it called again? An antitrust probe?
Yes, an antitrust probe. It means they're checking if a really big company is being unfair to smaller companies or other services, which can hurt fair competition. They want to make sure everyone has a chance to compete fairly.
Right, like in a game. You want everyone to play by the same rules, not just the strongest team. So why is Europe doing this now?
Well, it's part of a bigger trend, Jamie. Many governments around the world are watching these huge tech companies very closely, especially when they start adding powerful AI into their popular apps.
I see. Because AI is so new and developing so quickly, right? They want to make sure it doesn't create problems.
Precisely. The European Commission, which is like the EU's main government body, thinks these new WhatsApp rules could create a closed environment.
Closed environment? What does that mean for us, the users?
It means it could make it hard for new AI companies or new AI ideas to grow and offer their services on WhatsApp. And if that happens, it could mean fewer choices for us, the users, and less new and exciting technology in the future.
Oh, that makes total sense. We want lots of different AI tools and options, not just one big company's ideas.
Exactly. This investigation is a big signal. It shows that these government groups are really stepping up to make sure that these huge digital companies play fair.
So this isn't just about WhatsApp then. What happens here could affect other tech giants and how they use AI too.
You've hit the nail on the head, Jamie. The results of this probe could set a precedent, meaning it could become an example for how other big tech companies integrate AI into their services, not just in Europe, but maybe globally.
That's fascinating and so important for the future of AI and how we use our apps. So for our listeners, keep an eye on this space. We'll bring you updates on what happens with Meta and WhatsApp's AI.
Absolutely. It's a clear message. Fair play in the digital world is becoming a top priority. Thanks for tuning in to Tech Talk, everyone.
See you next time. Bye.
Hey, everyone, and welcome back to Pop Culture Pulse. I'm Alex.
And I'm Jamie. We've got some massive news today, truly monumental.
You know, Jamie, I think monumental might be an understatement for this one. Get ready for a huge shakeup in the world of movies and TV.
Exactly. So let's just get right into it. Netflix, the company we all know for shows like Wednesday and Bridgerton.
Oh, and Money Heist. Love Money Heist.
Right. Well, Netflix just announced something incredible. They're going to buy Warner Bros. Discovery's studio assets.
Wow, that's big. Can you break down exactly what Warner Bros. Discovery studio assets means for our listeners, Jamie?
Absolutely, Alex. It means Netflix will own Warner Bros. Famous film and television studios, where they make all those big movies and TV shows.
And perhaps even more exciting for many people.
Yes, it also includes their premium streaming services, HBO and HBO Max.
Okay, so just to recap, Netflix is getting Warner Bros. Movies and TV plus HBO and HBO Max. That's a lot. What's the price tag on a deal like this?
You won't believe it, Alex. This deal is valued at approximately $82.7 billion. That's billion with a B.
$82.7 billion. My goodness, that's a lot of money. When did this news come out and when will it all be finished?
The news was revealed on December 5th, 2025, and they expect the deal to be fully completed sometime in the third quarter of 2026. So, still a little time to wait.
Right, so next year we'll see some big changes. But Jamie, let's talk about the content. What does this mean for our favorite shows and movies? What's coming to Netflix?
Oh, this is the exciting part. Imagine this. Shows like The Big Bang Theory, the legendary The Sopranos, and of course, Game of Thrones.
Wait, Game of Thrones on Netflix? Seriously?
Yes, seriously. Plus, classic movies like The Wizard of Oz and the entire DC universe. So, Batman, Superman, Wonder Woman, all of that will now join Netflix's already amazing lineup.
That's incredible. So Netflix will have Wednesday and Game of Thrones in the same place. That's truly an unparalleled entertainment offering, as Netflix co-CEO Ted Sarandos said.
Exactly. He said their mission is always to entertain the world, and this deal will give consumers more choices and better value, and also more opportunities for people who create these amazing shows and movies.
That's a smart move. And what about Warner Bros. Itself? Will it change completely?
No, it seems Netflix wants to keep Warner Bros. Identity. They plan to maintain Warner Bros. Current operations, so the studio will still be itself, just under new ownership.
That makes sense. This deal really shows how much the streaming wars are heating up. Companies are merging, getting bigger.
Definitely. It's going to change how everyone competes in the streaming world, that's for sure. It's a huge consolidation.
Absolutely fascinating news. Jamie, this is going to be a huge topic for a while.
You bet, Alex. We'll definitely be keeping an eye on it.
For now, thanks for tuning in to Pop Culture Post. We'll see you next time.
Bye, everyone.
Welcome back to Crypto Catch-Up, everyone. I'm Alex.
And I'm Jamie. And boy, Alex, it's been another wild week in the crypto world, hasn't it? Like a roller coaster.
You got that right, Jamie, especially as we ended the week on Friday, December 5th. We saw a bit of a pullback in the market. That means prices went down after a pretty busy and volatile week, meaning lots of ups and downs.
Exactly. For our listeners, Bitcoin, or BTC, which is usually the biggest cryptocurrency, dipped a little over 1%. It fell below $93,000, trading around $92,227.
Wow. And Ethereum, or ETH, also slipped. It went under $3,200 and was trading around $3,169. So not just one, but both big players saw a drop.
That's right. And because of this, the total value of all cryptocurrencies in the market, what we call market capitalization, also fell by about 1.1% to $3.23 trillion.
So, Jamie, what caused this sudden dip? What's the main reason behind the market pulling back?
Well, a big part of it was something called outflows from U.S. Bitcoin and Ethereum spot ETFs.
Okay, for our beginner ESL learners, can you break that down a little? What's an ETF and what are outflows?
Good question. An ETF, or exchange-traded fund, is like a special basket of investments you can buy and sell easily, just like stocks. So a Bitcoin ETF holds actual Bitcoin.
outflows mean that people were selling their shares in these specific crypto ETFs, so money was actually leaving these funds.
Ah, so investors were taking their money out of these crypto baskets. And this happened for 2 days in a row, right? Even big companies like BlackRock and Fidelity saw a lot of money leaving their funds.
Precisely. This really suggests that investors are feeling a bit more cautious right now. Even though prices were rising recently, people are now taking a more careful approach in the short term.
That makes sense. When money leaves, it usually means people are being careful. But it's not all doom and gloom, right? I heard some experts are still feeling pretty positive about the long run.
Absolutely. Despite this immediate dip, some big names in the industry are still very optimistic. Take Tom Lee, for example, a co-founder of Fundstrat, which is a big research firm. He's actually very confident.
Oh, really? What does he think?
He publicly said he believes the Bitcoin and the wider crypto market have already bottomed out.
Bottomed out. For our listeners, that means he thinks the lowest point is already behind us and things are likely to start going up from here, correct?
Exactly. He thinks the market has hit its lowest point and is now ready to recover. He even believes the next 8 weeks could be really strong and change the typical 4-year cycle we often see in crypto.
Wow, that's a bold prediction. What makes him so optimistic?
Part of his optimism comes from seeing companies like Bitmine actually accumulating or buying significant amounts of Ethereum right now. When big companies are buying, it shows they have a lot of confidence in the future.
So we have a mix of immediate caution due to money leaving funds, but some strong long-term optimism from experts. That's a classic crypto scenario, isn't it?
It really is, Alex. This all reminds us that even though there's lots of innovation and new ways to use crypto, the market is still very sensitive to bigger economic changes, things like interest rates or even big government decisions.
Exactly. The overall economic direction set by leaders like President Trump's administration can definitely ripple through all markets, including crypto. It affects how much money people have and what they're willing to invest.
Right. So while new technologies are growing, the crypto market is still very much connected to what's happening in the global economy and how much money investors have and want to put in. It's always an adventure.
Always an adventure, Jamie. And that's all for Crypto Catch-Up today. Thanks for tuning in.
We'll see you next time.
Welcome back, everyone, to Tech Talk Simplified, your go-to podcast for understanding the big news in technology. I'm Alex.
And I'm Jamie. Alex, what a week for tech news. It almost makes you forget about all the other big headlines out there, even the ones about President Trump's latest announcements.
You're absolutely right, Jamie. While President Trump is keeping busy, there's also some massive news brewing in the world of artificial intelligence that we definitely need to talk about today. It involves two very important companies making a huge move.
Oh, I know exactly what you're talking about. We've got cloud data giant Snowflake and the smart AI company Anthropic announcing a massive partnership.
That's right. This isn't just a small agreement. We're talking about a whopping $200 million partnership. That's a lot of money, isn't it?
Wow, $200 million. That really shows how serious they are about this. So what exactly are they planning to do with all that investment?
Good question, Jamie. The main idea is to bring Anthropic's advanced AI called Claude AI directly into Snowflake's data platform. Think of Snowflake as a giant, super secure warehouse for all your company's important data.
I see. So instead of having Claude AI work on its own, it will now live and work inside Snowflake's data warehouse?
Exactly. And this is really important for businesses around the world. It means companies can now use very powerful AI tools, which they call AI agents, directly within their existing Snowflake systems. It makes using powerful AI much easier and smoother.
So it's like a special key that unlocks advanced AI powers right where your data already is? That sounds much more efficient.
Absolutely. Before this, businesses often had to use separate AI tools, which could be complicated. But by putting Claude models inside Snowflake, companies can do more with their data. They can analyze it better, make complicated tasks automatic, and get much deeper insights.
Deeper insights means understanding their information much better, right?
Precisely, and it's all done without worrying about data governance or security.
Could you explain data governance for our beginner ESL learners, Alex?
Of course, Jamie. Data governance basically means having clear rules and processes for how your company's data is managed, stored, and used. It's about making sure your data is correct, safe, and handled properly. And security, of course, means keeping it protected from unauthorized access.
That makes perfect sense. So this partnership helps businesses use powerful AI without compromising or hurting their data rules or safety. That's super important, especially for companies that deal with private or sensitive information.
You've hit the nail on the head. This setup allows the AI to process information closer to the data source. Imagine you have a valuable treasure. You don't want to move it around too much to analyze it. You want to look at it right where it's stored safely. This is similar for data.
That's a great analogy. And that $200 million investment really shows that both companies are very serious about bringing new ideas to enterprise AI. Enterprise AI meaning AI for big businesses, right?
Yes, exactly. It also shows a bigger trend we're seeing. Cloud data platforms like Snowflake are becoming central places or hubs for developing and using AI.
So instead of just storing data, these cloud platforms are now also places where AI lives and works to help businesses grow and change.
Exactly right. It helps organizations transform their operations, meaning completely change how they work, make better decisions, and speed up their digital transformation journeys.
Digital transformation journey sounds like a long trip. What does that mean for a business?
Good point. It means moving from old traditional ways of doing things to using more digital technology like AI and cloud computing to make everything more modern and efficient.
This partnership is a huge step in that journey for many businesses.
You've hit the nail on the head. This setup allows the AI to process information closer to the data source. Imagine you have a valuable treasure. You don't want to move it around too much to analyze it. You want to look at it right where it's stored safely. This is similar for data.
That's a great analogy. And that $200 million investment really shows that both companies are very serious about bringing new ideas to enterprise AI. Enterprise AI meaning AI for big businesses, right?
Yes, exactly. It also shows a bigger trend we're seeing. Cloud data platforms like Snowflake are becoming central places or hubs for developing and using AI.
That's exactly right. It helps organizations transform their operations, meaning completely change how they work, make better decisions, and speed up their digital transformation journeys.
Digital transformation journey sounds like a long trip. What does that mean for a business?
Good point. It means moving from old, traditional ways of doing things to using more digital technology, like AI and cloud computing, to make everything more modern and efficient.
This partnership is a huge step in that journey for many businesses.
So, in a nutshell, Snowflake and Anthropic are teaming up with $200 million to make AI easier, safer, and more powerful for businesses right where their data already lives. It's a huge win for companies looking to use AI responsibly.
You've summed it up perfectly, Jamie. It's truly a giant leap for business AI. And that's all the time we have for Tech Talk Simplified today.
Thanks for joining us. We'll be back next time with more exciting tech news. Bye for now.
See you then. Welcome back to Global Grooves, your easy guide to what's happening around the world. I'm Alex.
And I'm Jamie. We've got some really interesting and, frankly, quite surprising news for you today, coming all the way from India.
That's right, Jamie. Usually, economic news can sound a bit dry, but this story has everyone in the financial world talking. India's central bank made a big, unexpected move.
Exactly. So let's break it down. On Friday, December 5th, 2025, the Reserve Bank of India, that's the RBI, their central bank, announced something called a repo rate cut.
A repo rate cut. Sounds fancy, right? But what does that actually mean for us or for people in India?
Good question, Alex. Think of the repo rate as a very important interest rate. It's the rate at which other banks borrow money from the central bank. So when the RBI cuts this rate, it usually means that borrowing money becomes cheaper for banks.
And if banks can borrow more cheaply, then they can also offer cheaper loans to businesses and everyday people, right?
Precisely. And the big surprise here is that most experts didn't think the RBI would do this right now. You see, India's economy was actually looking pretty strong recently, with good growth numbers.
So why cut rates if things are already good? That seems a bit confusing.
It does, doesn't it? Well, the RBI is looking ahead. They want to help the economy keep growing and make sure prices don't become too low, which can sometimes be a problem for businesses. They're trying to prevent a future slowdown.
So they're being proactive, trying to boost things even more and make sure the economy stays healthy in the long run.
Exactly. And how did the market react? Well, Indian stock markets loved it. The main stock index, called the Nifty 50, went up quite a bit that day.
Wow, so investors were happy because they think this means good things for businesses. Which parts of the market saw the biggest boost?
The sectors that usually benefit a lot from lower interest rates. Things like banks, car companies, and real estate businesses saw significant gains. Why? Because if loans are cheaper, more people might buy homes or cars, and businesses might borrow more to expand.
That makes total sense. It's like giving a little push to the whole economy. Cheaper loans mean more spending and more investing.
You got it. And this proactive step by the RBI shows they're really focused on keeping India's economy strong and stable, even when there are global uncertainties. It gives investors confidence.
So, to sum it up, India's central bank made a surprise move to cut a key interest rate. Even though the economy was doing well, they did it to encourage more growth and prevent any future slowdowns.
And the markets reacted very positively, showing that people are confident this will lead to a more supportive environment for businesses and consumers.
A fascinating move from India, showing us how central banks around the world work to keep their economies thriving. That's all the time we have for Global Grooves today.
Join us next time for more easy-to-understand news from around the globe. Bye for now.
See ya!
Hey everyone, and welcome back to Tech Talk Daily. I'm Alex.
And I'm Jamie. Today, we're diving into something super important that affects our phones, our computers, and even national security.
That's right, Jamie. We're talking about the incredible world of AI chips. These are the powerful brains behind all the amazing artificial intelligence we see around us.
So, Alex, what's the big news today about these chips?
Well, it seems like some U.S. senators are really pushing for new rules. They want to control who gets the most advanced AI chips.
And specifically, they're talking about chips made by a company called NVIDIA, right? And they're looking at exports to China.
Exactly. NVIDIA makes these super powerful chips for artificial intelligence, or AI, and the U.S. government is worried about China getting too many of them.
Why is that, Alex? Why is it such a big deal if China has these chips?
Great question. The worry is that these advanced AI chips can be used for many things. They can help with everyday technology like better apps or self-driving cars, but also for military uses. We call that dual use.
So they could be used to make new, super smart weapons or advanced military systems?
Precisely. And this is part of a bigger plan by the U.S. government, especially under President Trump, to keep important technology safe and secure. They want to make sure China doesn't get a military advantage using U.S. technology.
Wow, that sounds like a tough situation for companies that make these chips. They want to sell their products, but there are these big national security concerns.
It really is. Imagine you're a company like AMD, another big chip maker. They need to follow U.S. rules, but China is also a huge market where they sell a lot of chips.
So they're stuck between a rock and a hard place, as we say.
Exactly. AMD has even said they are ready to pay a special 15% tax just to keep selling some chips to China. It's a very tricky balancing act for them.
So what is China doing about all this? Are they just going to stop using AI chips?
Not at all. China is actively trying to become self-sufficient. They want to make their own advanced AI chips.
Oh, like building their own factories and companies to compete?
Yes. For example, a company called Beidou's Kunlunsen is planning to raise billions of dollars to grow their chip business. And another company, More Threads, had an amazing start when it first sold its shares. Its value went up by a remarkable 425%.
Wow, that's a huge jump. So China is really serious about this.
Absolutely. They see it as a national priority to be a leader in AI chips. It's all part of this bigger global competition in technology.
So, to sum it up, the U.S. wants to limit China's access to advanced AI chips because of security concerns.
Right. And U.S. companies are trying to find a way to work within these rules, while China is working incredibly hard to create its own chip industry so it doesn't have to rely on other countries.
It sounds like this tech race is only going to get more interesting.
Definitely. We'll keep an eye on it for you. Thanks for tuning in to Tech Talk Daily.
See you next time.